What is going on, guys and girls? It's the Short Bear, and today we're going to talk about the best trade of the week, which was CPAH. It's not the biggest P&L trade I think I had this week, but I really wanted to talk about this one because the trade was just so clean and so easy, and I felt like a lot of people were on the wrong side. I saw a lot of people thinking, all right, this might be a long, let's long this will reclaim, and so on and so forth, right? So I wanted to make this video to talk about exactly how I managed this trade, what I looked at, and how everything came together as a plan to attack this stock. So this is the chart for CPAH, where I shorted, where I covered, where I trimmed, and so on and so on. So what I did is I started short pre-market. All right, market open, we spiked towards 350 and we dumped right away. I added some, spiked a bit, started trending down, and as soon as we got to the 280s, I covered half. We started spiking back over $3 and over VWAP. I started adding back and added to full size at 330. After that, it started fading, kind of retesting the previous support, broke down, I covered a piece, I covered more, and added back once we popped back towards 2 p.m. Added some more for the breakdown towards the close. We broke down, covered some, and so I think half, and the rest as we came back up into the range. So let's talk about everything. So the first thing I look at every single time I trade and every single time I touch a stock is research. So to do so, I'm going to BAM-SEC, which is my website of choice, as many of you know, right? And I type in the name of the stock, the ticker name, which in this case is CPAH. After that, I take a quick glance at the filings, all right, and I'm seeing, all right, we've got an S3 from 2014, which was amended in 2015. So those can't be used anymore to raise as they're more than 3 years old, and the effect filing was in 2015 as well. So this S3 can't be used anymore to raise. After that, I see, all right, we've got a 44B3 from 2015. This is a long time ago, all right, yeah, this is nothing, because the thing is, once you look at the 10Q, which is going to update everything, and you research for everything, right? So let's say we research for warrants, no warrants whatsoever, as you can see. After that, I'm going to look for, maybe they've got an ATM. So I type in sales agreement or ATM, can't find anything. After that, we're going to go for the convertibles, all right? And in this case, we don't get any info as well, right? So right away, keep in mind, I don't do a deep dive when I see a stock kind of start to run, especially later in the day where it's near the market open. I need to, be fast, right? So this is exactly what I do. As you can see, it took maybe 15 seconds if I'm not talking while doing it, right? A quick glance over the filings, and right away I know, all right, this is the kind of fundamental side, so I'm not seeing much dilution and so on, but still, I need to look at the chart. I need to see how we react to gap ups. I need to see if we've got bag holders, if we've got any kind of other supply than the dilution itself. All right, so to do so, I go to Think or Swim, right, which is my platform of choice for my charting, right? And as you can see, I already pulled up the chart for CPAH, all right, which ran right here on Thursday, right? The first thing I saw on CPAH, right, is the time. The time it started gapping up. So as you can see, we started running at, this is 8:46 a.m. in the morning, right, 9:30 market open. The time shows 14:46 because I'm in Germany, right? But basically, this is approximately 45 minutes before the market open, right? Right away, I know from my stats, right, I track every single stock and every single pattern. I know the stocks that start running. start running later than 8 a.m., right? So later than 8:30 a.m. especially. Those stocks tend to fail at the open. There is an easy reason for that, and it's basically that it costs less to start moving it up at that time because you don't have to wait that extra hour, right, where you need to push the stock up. So if you start at 7 a.m., you've got that 7 a.m. until 8:30 a.m., right, where you need to hold the stock price up because your target as a manipulator is going to be to get the most volume possible at the open, right, to start dumping more stock. So in this case, right away, as the time is 8:46, I know this is likely to fail, right? So this is likelier to fail at least. So number one, that's exactly what I want to look at, right? After that, I'm going to start looking at the history of the stock. So we've got multiple ways to do that. We can look at the daily, right? Is the chart downtrending? Do we have any history, right? So I'm going to look a bit more than 1 year. Let's take 2 years, right? And when I look at that, right, I've got the code, right? So you might not know this, but we at Matters Money have a partner working with us, Think or Script, all right? He programs everything. He is an exclusive partner at Matters Money, and he codes everything you need for Think or Swim, right? So this is the gap stat indicator which he programmed, which gives you exactly what you need regarding the stocks. So when the stocks gap up, I want the data to be automated. I don't want to look back manually. I want to have everything coded, fully automated in my platform. And this is what we're seeing right here. So during the last 2 years, we had 3 gap ups over 20%. 2 of those, all right, closed red. So we've got a right around 67% win rate regarding the gap ups. The average spike from the open is 73%, all right. This is mainly due to one big spike day, all right, this year. After that, the average close from the open when it stays over the opening price is going to be 176%. Same thing, this is only when it goes green, all right, and this is because of the big day. Usually on the other stocks, the gap stats going to use 5 years for those, all right, and we're going to get something more like 20 gap ups, and the stats will be, I'm going to say, in a sense, better to use because the more gap ups you're going to get, the more you're going to trust the data. All right, the more data points. That's the same thing when you track a strategy. The more data points you have, the better, because you go through market cycles. You want to build an average, right? And the average is going to be better if you have more data points. But the average close from the open when it closes below the open, right? So when it goes red is minus 18%, all right? That's something we want to know. So this code, all right, is available with Think or Script, all right? And if you want to use it and if you want to maybe see what else he has, I'm gonna put a link in the description for you to check it out. So from there, I'm gonna look at the, let's say, the 5-minute chart, right? Because we've got a previous run, right? A previous run, or let's stick with the daily for now. I'm gonna explain to you exactly why. So on the daily chart, we've got a previous run, right? We didn't fade back completely. People are still back from those running days. So the first running day, we had 42 million volume traded, and the second day, we had nearly 20 million traded, right? On the second day, right, when we gap up from $2 to $3, every single person which was long and held on to their position are still red on the trade, and part of the first day, right, part of the longs from the first day chasing into the high of day are bagged as well and red on the trade, all right. This is a very, very, very big part of this trade because it means for me, if we can't do, that huge volume we did on the previous runs, right, if we can't do 30-40 million volume, we're not going to be able to kind of overcome the selling, especially due to the bag holders on that first day. The chart is downtrending. We've got a history of failure. we've got the bag holders, so everything starts to come together now, right? And I want to know exactly from where the lungs are bagged, and if we had any major area or areas on those days, right, that we can use for this trade. So if on those days where the super big volume was traded, there was a big resistance area or a big support area which was held on major volume, you better bet that this or these areas are going to be retested and are going to be are going to play a big role and are still going to be um, used as points of supply and demand. All right, so we're going to look at, let's see, we're going to look at the 30 days chart on the 5 minutes, all right? Today, it's 30 days, and we're going to look at the 5 minutes, right? So when we scroll back, we're going to see, all right, those were the pretty much the 2 or let's say 3 days, all right, where we had action a few weeks ago. So now we're going to draw basically the resistance and support areas, all right? So we've got the first one right here, 174. I'm not going to go further than that because we didn't fade back, or I didn't expect the fade to be that big, right? So I'm looking at the stats. I'm looking at 20% is the average fade, right? So from $3, the average fade would bring it down to 220. So I don't need to go much further than, under 2. So after that, we've got pretty much this area, 250, which was retested after, and we've got $3 basically. We've got, let's see, right here, we've got that 365-ish area, and we've got 430. Let's see. I would call it pretty much 350 to 365 because we did, stop here and then we supported 365. We kind of supported after testing 350, 365 here, and then the next morning we topped out at 350, right? So those are the areas I'm going to be looking at. All right, we still got $5, right? And we've got 560s. So now we can go back at the 1 minute chart. Let's take the 2 days 1 minute chart here. Right, and let's look, right? So now you start to see the picture, right? So on the big running days, right? On the big runner day and then the fade back day, the crash day, the biggest support or resistance area is and was 350, right? So 350 to 360. So that was the area I wanted to look at for this day, right? And now everything comes together, right? So I know the sentiment for this stock is not necessarily super bearish. And I know people are going to start to chase long, right? They chase long because they're seeing, oh, this could run in the past, all right? This has no dilution, this is going to be this and that, right? But when too many people are on the same side and it doesn't work, usually we're going to get a sharp reversal. So what I saw on this stock and my thought process was the gap up time is not right for a runner. The volume pre-market is not right for a super runner. The pattern just spiking and showing kind of strength into the open is not something I want to see on a runner, right? Because it's like you are trying to make this stock look a certain way for people to chase into it on the side you want, right? So if you set it up this way that it's strong and supporting pre-market on the low volume, usually it's going to fail. In my books, that's something I like to short into because they're basically trying to get a higher price on lower volume. So the capital need is not as high. They're going to move it up and people are going to chase long because it looks strong. And if you are a company that wants, to really ramp the stock up and to accumulate shares, you don't want to make it look strong. You want it to make it look weak because you want people to sell into you buying for you to accumulate at a lower price and then spike the stock up. If you do it that way, a lot of people are going to be long. You're not going to be able to fill your positions. your average is going to be higher. So that's not really what you want to do as a long player, right? As someone that wants to accumulate a lot of shares. So when I saw that, started moving up, all right, and I see this overextension into the open. A lot of times we even see a crash back just before the open. So I started in 330s, high 330s, thinking I want to add this on this one if we get towards 360, all right? So 350, 360. And if we don't get that and we stop just before 350, I'm fine with what I have right now, and I'll look to add once we reject. So we start doing that, right? I get in, we start going toward 350, can't make it into the 350s, crash down. I see it try to pop heavy, 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 try to pop heavy, and I add right here, right? So I add towards 315-ish because I want my average to be right around 325-ish. That gives me a nice kind of cushion, right? If we start spiking up towards that, I'm fine with the average, but at the same time, I don't want it to be too low because I don't want it to, to be where my stop is, whatever, 30 cents to 40 cents, right? I want a tighter stop than that. So I'm adding, I see it, I still see this kind of resistance towards support at 290s, right? Start supporting it, start spiking, or VWAP right away, reject super heavy, and we reject. After that, we start spiking back, kind of retesting the support area. If you draw just a trend line right here, right? We start moving towards that 290s again, support, and then we start cracking right here. And why did I cover there? Well, because at first, we've got that 18% average fade, right? The 18% average fade. Now let me calculate it right away. It's going to be quicker if I do it right here on my phone. The open was right around 330, right? So 330 times 0.82, right? It's going to give you the average fade, which is 270s, right? So 270s is right here, right? And that's where I want to get a piece at. So 270 is going to be the full fade, right? The average fade, and I know on the faders, the average fading time, right, is going to be towards the afternoon, right? So on the afternoon, I'm going to get the low of day. But if we're making it so close to the low of day right away at the open, I want to cover a piece because that's going to show me people are over emotional, right? The low of day is still likely to happen further away, right? During the end of the day. So I want to take a piece right now into the emotional side, right? And this one was too choppy for me to hold longer than that for the full position I had. Because when I look at faders, when I look at stocks that are very weak, usually they don't spike back quite like this, right? So we're going to get bigger crashes, small pops, super heavy, and fade, fade, fade. But this one is pretty much we drop, consolidate, we push, we drop, we consolidate, we push, we consolidate, and we start cracking, but we can't really crack down enough. So every time it gets kind of supported, 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 and I don't want to see that because I don't want to be in that grind back where, because the thing is, every time it pops, shorts are going to be involved, shorts are going to be involved, shorts are going to be involved, right? And that's not good for us because the time it supports, shorts are going to be hammering in and they're going to get squeezed out. So that's what I was seeing, kind of too much support, people really kind of looking for that big breakdown on the short side. And the problem is, once we start reclaiming, once shorts start capitulating, usually we get a big kind of spike back. And I knew we are in that market where shorts are going to be hammering everything. And in this case, I knew shorts were hammering, but at the same time, we had longs waiting because a lot of people were like, yeah, it's going to reclaim, it's going to reclaim. So I covered a piece. We started reclaiming. People right here already like $3, they were like, all right, new high of day, this is going to rip, right? But I knew we still got that major backholder area towards 350, right? And we couldn't even make it at the open, so it's even weaker, right? The biggest volume on the day, the moment where the stock was looking the strongest, we couldn't make it. So I'm not expecting the stock to kind of make it back towards those areas, right? I'm looking at the longs, when are they going to be back basically, and I want to kind of squeeze over the liquidity areas for the manipulators to get the stops and the liquidity. So in this case, we had the VWAP towards 310-ish, I believe, and we had this resistance area right here at 325-ish, and the high of day, right? 325-ish was also a high and major resistance area during the pre-market session. So as we move back towards this area, right, the VWAP area, and pierce over it, I get 1/2 of what I covered here back on. And I'm thinking, I really hope this one can push one more leg up. So instead of one leg up, I want one, pull back, two, and then fade back, all right, after the Elliott wave principle. So as we spike up, right, towards the highs, I add back to full size, risking the high of day, and right away, big slam back, all right, people, every single short just got squeezed out, longs chased, and now that the shorts are out and the longs chased, everyone's going to be looking to reshort and to sell the long position. So after that, I'm looking at the fader stats and the average fade on the stocks, which is going to be pretty much, well, I'm not going to go too much into it because I don't want to share every one of my secrets. And we've got a lot of courses, we've got a lot of videos exactly covering that on Meta's Money. So if you want to join, the link is in the description as well. But basically, the average fade is going to continue into the afternoon, which is why I'm holding on to the stocks, right? So people are getting bagged, it's getting heavier and heavier, more and more longs are, bailing out. And as we crash down, I take my first cover as we can't really crack and, see panic towards 250. And we start grinding more, we see an overextension towards 250, and I cover more, we see a spike back, right? And I'm still thinking in my head, the average fade is going to take more than that, it's going to take longer, so I'm adding back more. We try to spike back up, can't make it, fade back towards the support area. I'm adding more for the breakdown. We break down, not much volume, right? And not much panic. And I'm seeing a lot of hidden buying. So I decided, you know what, taking everything off, and I took everything off. All right, this was it for this video. If you like it, please leave a like and subscribe, and I'll see you in the next one.